Hi looters, welcome back to Tick to Loot market updates for August 15th, 2026. Before we dive in, remember, this video is for educational purposes only and is not financial advice. Markets carry risk. Always do your own research and consult a licensed financial advisor before making any trading decisions. Today we'll recap yesterday's data, scan today's calendar, and give you the market context you need to stay ahead. Let's start with what happened yesterday. The German wholesale price index came in at a forecast of minus 0.2% month-over-month, easing from a previous decline of 0.7%. While the actual figure hasn't been released yet, the low-impact forecast suggests modest deflationary pressure in Germany's industrial sector. In France, the final consumer price index was expected to hold steady at 0.6% month-over-month, matching the prior reading, again a low-impact release. Over in China, the M2 money supply growth was projected at 7.9% year-over-year, slightly below the 8% seen last month, and new loans were forecast to shrink dramatically to negative 50 billion yuan after a massive 1.61 trillion yuan previous month. Finally, the Eurozone flash employment change was expected to be flat at 0.1% quarter-over-quarter. All of these data points carry low impact, meaning the market likely priced them in ahead of the releases. Even with low-impact numbers, the broader market moved. U.S. Treasury yields nudged higher, reflecting a modest shift in risk sentiment, while the U.S. dollar slipped against a basket of major currencies. Equity markets finished mixed, with some Asian indices gaining as investors digested the weaker Chinese loan outlook, and European stocks staying flat amid the subdued Eurozone data. The takeaway? Traders are watching the yield curve and dollar dynamics more closely than the individual data releases themselves. Turning to today's calendar, there are no high-impact releases scheduled for the day. That means the market is likely to stay range-bound unless unexpected news pops up. With a quiet day ahead, traders often focus on price action, technical levels, and any geopolitical headlines that could stir volatility. Even though today lacks headline events, low-impact Eurozone numbers may still surface later. Think regional PMI updates or retail sales snapshots. These releases won't move the market dramatically on their own, but they can provide clues about underlying economic health and may nudge the euro if they diverge sharply from expectations. On the U.S. side, the calendar is light today, but the market will keep an eye on any intraday updates to Treasury yields or corporate earnings releases. A surprise shift in yields could reignite dollar momentum, while strong earnings could buoy equity indices and indirectly influence Forex pairs. Commodities also play a supporting role. Oil prices have been steady after a modest pullback, while gold remains in a consolidation zone as investors weigh the relative strength of the dollar. Any swing in these markets can ripple into the Forex space, especially for commodity-linked currencies like the Canadian dollar and the Australian dollar. Recent headlines from the Americas FX wrap highlighted mixed equity performance, rising yields, and a weakening dollar. Analysts point to the yield rise as a sign that investors are demanding a bit more compensation for holding bonds, while the dollar slide suggests risk appetite may be returning, albeit cautiously. These macro trends set the backdrop for today's quiet calendar. Risk sentiment remains in a delicate balance. With no major data to drive direction, traders are likely to watch for any geopolitical or corporate news that could tip the scales. A sudden spike in risk appetite could lift risk-on currencies like the Aussie and the NZD, while a shift back to safety would support the yen and the Swiss franc. Looking ahead to the rest of the week, keep an eye on the upcoming Eurozone inflation reports, U.S. non-farm payrolls, and the Federal Reserve's policy statements. Those higher-impact releases will likely drive the major moves in the Forex market and could reshape the narrative we're seeing today. That's a wrap for today's Tick to Loot market update, looters. To recap, yesterday's low-impact data left the market largely unchanged. Today's calendar is quiet, and the broader backdrop is shaped by yields, the dollar, and risk sentiment. Remember, this is educational analysis, not advice. If you enjoy the update, Hit that subscribe button and ring the bell so you don't miss tomorrow's fresh market outlook. Catch you on the next one.